This week, I took a 5.8% hit on my portfolio, but here's the kicker. TQQQ lost 8% and I managed to beat that by 2%. Wondering how I pulled it off? Well, in this video, I'll break down exactly how my strategy helped me minimize losses and outperform the market despite the rough week. Hey everyone, welcome to my channel $0 to $1 million, where I'm on a mission to grow my investment portfolio from $0 to $1 million in 10 years. This is the first video on this channel and I'm very excited to take you along on this journey, and I have personally invested using this strategy and achieved 35% returns in the last year, aligning with the backtesting data. More about this and why I chose to invest in TQQQ in a detailed video very soon. By documenting my journey, I'm holding myself accountable and ensuring I stick to my rules without distractions. This channel will serve as my investment log, and I hope it helps others understand how a disciplined approach can yield strong results over time. If you're interested in a structured, rule-based investing approach, make sure to subscribe. A quick disclaimer: this is not a financial advice and the stock market carries risks, and you should always do your own research before investing. Personally, I've allocated my capital very carefully, ensuring that I have a safety net before taking aggressive positions. Never invest money you can't afford to lose. Now, let's talk about the actual investment plan. Nothing fancy, no rocket science, just simple, systematic investing. Before I go over the rules, I just want to mention I'll be repeating this every single day. If you find it repetitive, feel free to skip ahead. You all might be wondering why the same thing every day. But for me, it's never the same because every trading day is different. When we are losing money, emotions take over and the temptation to break the rules and chase a recovery trade is very strong. And while we are making money, fear kicks in, and the fear of losing profits can lead to rushed decisions, exiting too early, or changing strategies impulsively. That is why I stick to my process no matter what the market does. So with that in mind, let's go through the rules. Step 1 is to decide on my daily investment amount. I follow a strict weekly investment limit of $750 when there is an uptrend and $1,000 in downtrend. But the number of units I buy changes based on market conditions. Here's how my investment allocation works. I check the previous day's TQQQ price on a 1-day time frame. If both the opening price and closing price are above the 12 EMA, I buy 2 units. This is keeping the current price in mind. If both opening price and closing price are below the 12 EMA, I buy 1 more unit than I would if they were above the 12 EMA. So in this case, 3 units. These number of units changes based on the current market price, but the weekly investment limit remains fixed. So this ensures that I invest dynamically, buying more when prices are lower and less when they are higher, while staying within my budget. Step 2 is my entry. I switch to a 5-minute time frame and wait, as my goal is to buy at a lower price. So I wait for the price to dip below the 12 EMA and then bounce above it. And I invest when above condition satisfies, and later I monitor my profit and loss at the end of the day. Now, investing is not just about buying. It's also about knowing when to sell, how to manage risk. So I will cover all this risk management and profit booking strategies in a detail in an upcoming video. Now, I'll take you all through how I made an investment in the past week following the rules. On February 18th, I started by checking the previous day's candle. I observed that both the opening price and closing price were above the 12 EMA on the 1-day time frame. So based on my weekly limit, I decided to buy 2 units of TQQQ. Next, the step 2. I switched to the 5-minute time frame, where at 8:45 the price dipped below the 12 EMA and I waited patiently, and at 9:55 AM the price bounced back above the 12 EMA. And this was my entry signal. signal. So I bought 2 units at $89, investing $179. On February 19th, I repeated the same process. Again, both the opening price and closing price were above the 12 EMA, so I decided on 2 units. At 8:45, the price dipped below 12 EMA and I waited for it to bounce back. By 9:40, it bounced back above the 12 EMA and I entered the trade at $89, investing $179. Again, the next day, that is on February 20th, I followed the same procedure. Once again, the opening and closing prices were above the 12 EMA, so I decided on 2 units again. And this time, the price dipped below the 12 EMA early in the morning, so I waited until 11:05 for a bounce back above the 12 EMA. So I ended up buying 2 units at $88, investing $176. Now, let's talk about February 21st, where I made a mistake that I want to be transparent about. The opening and closing prices were above the 12 EMA, so I planned to buy 2 units. But as I monitored the 5-minute chart, the price dipped below the 12 EMA at 8:50 a.m. and I waited. At 10:15, a doji candle formed, followed by a spinning top at 10:20. These are indecisive candles and typically I should not have based my entry on them. The proper approach would have been to wait for a clear, decisive candle signal. Unfortunately, I entered the trade and as the day progressed, the price never bounced back above the 12 EMA. If I had followed my strategy correctly, I would have made no investment that day. But I acknowledge this mistake and I will take it as a lesson for the future. It's important to recognize when we slip up, learn from it, and ensure we don't repeat the same errors. Now, by the end of the week, my total investment was $17, staying within my weekly limit, and the market price of my holdings came to $669, resulting in a loss of $41. This means I experienced a 5.8% loss for the week. Now, when comparing the performance, TQQ itself lost 8% this week, which means I outperformed TQQ by 2%. Here's the context. TQQ is a leveraged ETF, meaning it moves 3 times as much as QQQ, both in gains and losses. Without a strategy, it could amplify your losses, but the goal here is to use that leverage to generate greater profits than what QQQ can offer while minimizing the downside risk. With the strategy in place, I'm aiming to capture those higher returns from TQQQ, but in a way that reduces the volatility and losses that come with the leverage. This is the standard I compare my performance to, and it's important to always remember the balance between risk and reward. So that wraps up my investment journal from February 18th to February 21st, and starting February 24th, I'll be posting daily updates and I'll try to keep it as short as possible and summarize at the end of the week for weekly performance. So if you're interested in real-time insights, make sure to subscribe and follow along. See you in the next feed.